There's this saying I've constantly heard, the market is always correct, you are the problem. And this morning I decided to take a good look back at everything I have done. Now the thing is this, yesterday I made a video where I talked about AUD USD being the worst pair I've ever traded with Trendlines. However, this morning what I discovered will shock you, so stick long enough for this video and you will see the entire story. So yesterday I called Australian dollar US dollar the worst pair I've ever traded, and honestly speaking it actually was the worst pair I had ever laid my hand on with trendline trading. However, with deeper analysis into every loss, I got to notice some things that, well, I think everybody can learn from this mistake, because this is things that you might be doing repeatedly without knowing, and it's something that I noticed I was constantly doing over and over again, even though at the point in time a side of me was like, are you sure you're not doing this? I didn't take notes because I was taking random trades, and that's no excuse, but truth be told, I made a lot of errors. I wouldn't have taken as much trade as I had taken if I had followed a proper trendline strategy. So let's look at what these errors are. I did a write-up of 5 different situations, 5 different things I had learned. The first one came right from day one, where I said avoid lower time frame trading for now. So this is something that I noticed right off the bat, right? Because when I took my very first 2 trades, the British pound US dollar and the Australian dollar US dollar, I took them on the 15 minutes and I instantly lost both trade, and something kept ringing to me, right? I didn't have enough I wasn't good at this. This was before To Retrade said something about taking the reps and just taking trades like that for now, just to get the reps in. Now, when I started to get the reps in, the second lesson came in. It said the trend line from the higher time frame should hold more weight than the trend line from the lower time frame. Yes, this is very true, because you're trading trendline bounce. Trendline bounce is actually when price on the lower time frame gets to an area of the trendline area of the higher time frame. Because it's a continuation of the trend, it will most likely bounce off it and go back down. For example, in a downtrend on the higher time frame. So focusing on this area, right, using this specific area of the specific area to just determine what you're looking at right now. Something you notice is price crossed above. Price before this part, right? What you notice is if you go down to the 4-hour time frame, what you notice is this. Price did break through at some point. Yes, price broke through. However, when price got around here, price went out, came back in, and bounced a little bit out of it before it went off to go ahead, and then you see it kept going in and out, in and out, in and out, and then pushed even further before it finally pushed away from it. Now, trendline bounce is totally different from this. It's something that the price really respects the line, right? Respects the line very well and veers off it in the opposite direction, right? But however, that was just something I just started to observe often. The price will tend to bounce in the higher time frame trend line. Whenever price, if you're taking a let's say 5 minutes trend line and a trend line break on the 5 minutes, when price is getting to things like the 1 hour, the 4 hours trend line, there is a high tendency price is going to bounce around there, and it's best you just leave your trade first unless you are very experienced with it. So that was the second lesson I learned. Now these 2 lessons didn't really affect my account much. I had never seen them. Now moving on to the third one, this is another lesson I learned. It says look for double confirmation when the lower time frame trend line becomes the safety line against a higher time frame trend line. Now again, very similar scenario to bounce, right? If price is breaking out of a higher time frame and the safety time frame trend line is a lower time frame, obviously you should wait. I mean, just like what we saw, price bounced a whole lot, went in, came back, went out, came out, just like that. So you need like second level confirmation, which is waiting for price to literally close properly on the other time frame, that's on the higher time frame, before you start to dive into it. That's something I also noticed from the top. But when it came to yesterday's problem, right, it came to the problem of the reps, the 40 plus trade I had taken, and the Australian dollar US dollar issue. I noticed one particular recurring problem, and it was not just for the Australian dollar US dollar. It was something I noticed across our board, and it's one thing that I know as a trendline trader, it will literally kill your trendline career. It was supposed to be named, it was supposed to be number 4. However, I renamed it to wrong trendline drawing. So what did I say? I said stop coming in with steeper trendline. Wait patiently for those clear pullbacks. This is something I want to show you guys an in-depth look into. So let's take a good look into it. I have too many cases of this not to have it called like a central focus of its own. Too many cases. It's too often repeated too much, and this is what you're going to notice. Let's dive into it. Wrong trend line drawing. Australian dollar US dollar is the peak of it all. This is where I saw the most amount of mistakes. Matter of fact, almost every trade I took on the Australian dollar US dollar came with that mistake. Almost every trade, and they were all avoidable. So let's start with the very first one. This was the very first, no, this is not first, this was like one of the trades. This is on the 1 hour. I had drawn my original, I'll show you guys the real trade. I had drawn my original trend line here. Like I labeled it wrong drawing. I drew a trend line right there and it was wrong. I did it because I was trying to just catch the trend at all costs. So that is it, wrong trend line drawing. This is one instance. I want to show you more instances where it happened. This is another instance just right after that same one. This was the you can see this trend line down here is absolutely wrong. It was supposed to be drawn up here, and then price had closed above below it. So I wasn't even supposed to enter a trade in the first place, but I was in a trade chasing the market. Again, the same scenario, cutting me off multiple times. 3 trades in a row. This is it again, another one. You can see how I drew the trend line, and I started counting these as touch points. These are not good trend lines. These are not good trend lines. You can see it right here. This is wrong. Why? Because there's no clear pullback. There was no clear pullback. So this line was absolutely wrong, including this one down here, which is the same line as this line you can see right here. It is terrible trend line drawing. I would have waited for this pullback, which happened. That was a clear pullback, and that was where I was supposed to take trades with. Most of the losses were avoidable. I decided to create new columns to say, okay, would I have won this trade if I had taken it differently, and what would I have done differently? What should I have actually done? Now, you can see every single one of these losses was clearly avoidable. These are all the losses. A lot of them were avoidable. There was none of this loss that is unavoidable. None. Not a single one of my losses was unavoidable. They were all avoidable for different reasons. And you can see the reasons all tallied up here. And one thing you can see clearly is wrong trend line, wrong trend line, wrong trend line, wrong trend line, wrong trend line. Constantly repeating itself. Wrong trend line drawing. Constantly. Very few of them had me to just stick with the original safety line. If I had stuck with the original safety line, I would have been in profit. This was where I discovered lower time frame was not meant for me. And then the last situation here, which is the very last lessons learned, was to always exit on the break of original safety line. Now I'm going to show you what this all means by pulling up the charts of these different markets so that you see. Let's start with the one that says stick with the original safety line, and I'm going to put this in full screen mode, in the full page mode, so that you guys see it. This is the Australian dollar Japanese yen, and this was a trade I took on the 16th at 5 p.m. in the evening. Now this was the original chart drawing before I took a trade. This is my safety line. As you can see, painted up here was supposed to be my safety line. I decided to draw in a steeper safety line, which, man, I don't know where I got that rubbish from. However, However, that trade, oh, okay, this is both the entry and the stop loss. However, the moment price cut through this safety line, this new safety line, I stepped out of the trade myself. Manual exit, right? Manual exit. If I had stuck to the original safety line, this is what would have happened. The trade would have lasted a bit longer, about 5 days, but I'll still end up with 1.5 profit factor. Like, that is it, 1.5. Meaning I would have made $1,500 after risking $1,000 on this trade. Now, another thing you also notice is price did go back to my safety line, but it closed above it only once and kept on playing around it, and finally returned strongly to profit. 5 whole days. This is the first instance of, like, I should have done this better. Clear loss. Moving on to the next situation. This is where almost every other situation here was a situation of wrong trend line drawing. I'm just going to pick some random ones and show you guys wrong trend line. At the Australian dollar, US dollar. This was on 22nd. That was like not so long ago, 2 weeks ago or so, at 2 a.m. in the morning on the 15 minutes time frame. I wonder what I was doing waking up at 2 a.m. trying to trade. Anyway, now this is what happened. It's something that was avoidable, and the issue was that I had drawn wrong trend line, but I did observe a proper exit in this trade. So this was the market. I did it on my phone. I think there was no power supply or something. Moving on, this was how the trade got stopped out immediately. Now you see, the thing with trading on your phone, especially on the lower time frame, is because it's on the phone, I can't squeeze the picture and show you guys a clear picture. Hence, the final one is going to show you the clear picture. This is the clear picture of what I did, and you can see how extremely steep that safety line is. Extremely steep. This is this red line down here that's going berserk on one side. This red line coming down, very steep trend line, not accurate at all. Not accurate at all. And when I looked at it, I got to see, okay, I personally did make a mistake taking that as a safety line. I did make a big mistake taking that as a safety line. It was terrible. It was a wrong decision. Moving on, let's see another situation. This is the British pound Japanese yen. The same 22nd at 10 a.m. That, as a matter of fact, 22nd I did a lot of nonsense. You see how many trades I lost on 22nd? 1, 2, 3, 4, 5, 6, 7, 8. That is clearly over trading in its own. 8 trades for a swing trader in one day. That is absolute over trading. Now, wrong safety line was drawn. It was avoidable. This trade is still ongoing to an extent, but now I want to show you guys something that is very painful to me. Let's take a look at what I did. This was the way I entered this market. I was supposed to use a weekly safety line, right? You can see my stop loss above this weekly line right there. And then watch how I stopped out of this trade. I drew a sudden new safety line out of the air and then stopped out of the trade because price crossed that miraculous safety line that I drew out of air. Whereas, take a good look at that same trade right now. This is a clear sign of you're unnecessarily stubborn. You're just doing nonsense. That is what this looks like. That is what this is, not what it looks like. That is what this is, unnecessary stubbornness. And this trade is, you can see, it has gone so much in profit. I could have even closed it out in real profits, like crazy profits, and then let the trade run by. But no, I wanted to, hold the market there. I'm the one who's supposed to hold the market, not the other way around. Can you imagine that shit? Now, another Australian dollar, US dollar. This will be the last I'm going to show you guys. 29th of September at 7 a.m. I'm a 7 a.m. person. I usually trade in the morning because I'm about to start work. Now, what you notice here is I lost $600 on this trade. It was avoidable. It ended up in profit with a 1.1 profit factor. 1-to-1 risk to reward ratio. Now it ended up last week. This was on Friday. 3 days. That was what this trade was supposed to take. A proper 3 days if I had stuck patiently with it. What happened here? First and foremost, this was the trade, the actual trade itself. I drew a trend line so tight as my safety line. There is no clear pullback for this to be a safety line. There has to be a pullback for me to call it a safety line. Over here, I had a clear weekly safety line, which I refused to use. Fast forward hours later, boom, I was in loss. It was some hours later, a couple of hours later, severe loss compared to what this trade actually ended up doing. You can see crazy amount of profit, very crazy. Closing the trade when it touches the higher time frame trend line as usual. You can see this trend line is coming from like a longer distance in the future, but if I had just kept the trade running, I'll still be in crazy profit. See how much profit I would have made. So again, what is this whole video about? This whole video is about telling people, yes, your strategy, my strategy works. Trendline strategy literally works. It works very good. However, the moment you start doing the trend lines wrong, you will lose it. The same thing applies to every other strategy. They actually do work. But the moment you start trying to bend it or twist it to favor you more, or try to edit it more than it's supposed to be, you start losing. And clearly, a lot of my losses came from this. A lot of my losses came from trying to draw extremely steep trend lines. If I wanted to use a steeper trend line, I'm supposed to use that trend line on a way lower time frame, because on a very lower time frame, that's a clear pullback, right? And if I had traded with that kind of time frame, I would end up in profit. Most likely end up in profit. However, I made personal mistakes of drawing trend lines way too steep or way too tight, and I think it's good I learned the lessons on a demo account, on a paper account. That's the best thing you can ever do. Like I said, never be ashamed to say it's a paper account. Never be ashamed to trade a paper account. It is a learning curve. It's for learning. And this is to a friend of mine, a very, very interesting person who has been very responsive, Maureen. Thank you very much for supporting the channel. For those of you who want to join Maureen and support this channel, do leave a comment section. Leave a comment down below. Maureen also asked for something. He or she, I don't know if it's a he or she, but they asked that they want to be able to test fair value gaps on forex market. I've done this to an extent before when I was trading MMT. That was Ayo Jansen's trading strategy, which is somewhat like ICT, but it's all about focusing on imbalance and which is fair value gap, price imbalances. So he's asking to just do analysis of when price goes into areas of imbalance, how do they respond in forex? Do they respond positively or negatively? I've done this to an extent before, but especially because of him or her, I will be doing it again, but not the MMT we know of, right? I'm still going to create a journal for that one where we can get to analyze, all the trades taken for that situation. However, still going ahead with more refined trend line. And what's the verdict? AUD US dollar is not off the chart for me. It means I can trade it again. Yes, I can trade it again. So I will trade AUD US dollar again. And this time I'll trade it with way more refined trend lines. And we're going to do that for probably another 50 trades. And this time we're going to apply it to, like I said, smaller amounts of currency pairs. Before it was all majors and any other thing. Now I have 4 pairs, making it 5. So I have the US dollar, Euro US dollar, the British pound US dollar, the US dollar Japanese yen, the US dollar CAD, and last but not least, the Australian dollar US dollar. This time with refined trend lines, absolutely refined trend lines. At the same time, we're also going to be taking the fair value gap or imbalance testing on another account. Probably that will be on a demo account on another broker or on TradingView too also, probably. I don't know yet. But when I do all of this, you're going to see the progress throughout the week, all the way to next week, and then we're going to see how it goes from there. With this, I'd like to tell you thank you for watching. Get to learn more when it comes to forex from the videos on the channel, on the page. See you guys. Peace.